If you could know exactly where the big players, banks, institutions, and smart money, are likely to enter the market, would that change the way you trade? That's the power of supply and demand. Unlike basic support and resistance, these are not just lines on a chart, they're zones where massive buy or sell orders are waiting. When price returns to these levels, it often reacts with explosive moves, giving traders the opportunity to enter with precision and control risk. Mastering supply and demand isn't just another trading skill, it's the foundation of understanding market behavior at its core. In this video, we are going to talk about supply and demand zones. We'll start with what supply and demand zones are and why they matter, then uncover the market logic behind these zones so you truly understand how they work. And we'll explore the role of smart money in creating them. You'll learn exactly how to identify strong zones. I'll then walk you through how to trade supply and demand step by step, and wrap up with my pro tips for trading these zones effectively so you can trade with more precision, confidence, and consistency. If that's something you're interested in, make sure to hit the like button to show your support, and subscribe to the channel if you're new here. In trading, every price movement comes down to one simple force: the battle between buyers and sellers. A supply zone is an area on the chart where sellers are in control. Price previously dropped sharply from this zone, indicating that strong selling pressure was present. This happens when there are too many sell orders and not enough buyers to absorb them. As a result, the price falls rapidly, and this sharp move forms a supply zone. On the flip side, a demand zone is where buyers dominate the market. It's a price area from which the market previously bounced or rallied strongly, showing strong buying interest. Now, you might be thinking, isn't that just support and resistance? Not exactly. Support and resistance are horizontal levels where price reacts, but supply and demand are price zones that show where big market participants, banks, institutions, and smart money, have placed their large buy or sell orders. These zones create imbalances in the market, which often lead to sharp moves. Understanding supply and demand gives you a true edge. Instead of chasing price after it moves, you position yourself where the big players are likely to enter. This is the foundation for trading with precision, reduced risk, and higher reward potential. To understand why supply and demand zones work, we need to look at how the market really operates. Price doesn't move randomly, it moves because of an imbalance between buying and selling pressure. When demand is higher than supply, prices rise. When supply is greater than demand, prices fall. The most powerful moves often come from large institutional traders, banks, hedge funds, and big financial players. They don't place their entire position at one price. Instead, they split their positions into smaller parts and execute them in key price zones where liquidity is available. When the price returns to one of these zones, it often reactivates unfilled institutional orders, causing price to bounce or reverse once again. That's why supply and demand zones tend to hold, and why they often produce strong, tradable price reactions. By learning to recognize these zones, we can align our trades with the market's most influential participants, rather than guessing where the price might go. Now that you know what supply and demand zones are and why they work, let's move on to identifying and trade them, using real chart examples. For a demand zone, look for a drop base rally, a drop in price, showing strong selling pressure. This is followed by a brief pause or consolidation, the base, where large buyers quietly place their orders. Once those buy orders start filling, price surges upward in a strong rally, signaling that demand has taken control. To mark a demand zone, find the last bearish candle before that upward move. Draw a rectangle from the low to the high of that candle. This forms your demand zone. After marking the zone, wait for price to return to it. Patience is key. In our example, as price touches the demand zone, a pin bar rejection wick forms, showing clear buyer interest. This is your confirmation. Entry a buy position after the confirmation candle closes. Stop loss just below the demand zone, or the low of the pin bar. For take profit, use the next resistance or supply zone as your target. To identify a supply zone, look for the opposite. A rally-based drop. An upward move, showing that buyers are in control. Price then pauses in a small consolidation, the base, where large sell orders are quietly placed. Once selling pressure takes over, price drops sharply, confirming that supply has overwhelmed demand. To mark a supply zone, find the last bullish candle before that sharp drop. Draw a rectangle from the high to the low of that bullish candle. This forms your supply zone. Once you've marked the zone, wait for price to return and retest it. Now, look for confirmation before entering a trade. In this example, we see a tweezer top pattern forms right at the zone, a strong sign that sellers are stepping in again. Entry a sell position after the confirmation candle closes. Stop loss just above the supply zone, or the high of the confirmation pattern. For take profit, use the next demand zone or recent low as your target. Let's now look at a few pro tips for trading supply and demand zones effectively. Zones where price leaves explosively are usually stronger. Fresh zones have higher probability, especially on the first or second retest. Always trade in the direction of the trend. Demand zones in uptrends. Supply zones in downtrends. Wait for confirmation before entering. Some confirmation patterns you can look for include candlestick patterns, break of structure, change of character, or even a break in internal structure showing sellers stepping in when price returns to a zone. Remember, master the zones where the market speaks, because success in trading lies not in chasing price, but in understanding where buyers and sellers take control. If you found this video helpful, don't forget to like, subscribe, and hit that bell icon so you never miss our next video. If you have any question, drop it in the comment below. Thanks for watching, see you in the next video.